Welcome to Brookfield Perspectives. Today, we're bringing you another edition of Deal Debrief, where we unpack recent transactions with the people who put them together. On this episode, we're diving into our growing presence across Southeast Asia with 3 recent investments that mark important growth in Brookfield's Catalytic Transition Fund, or CTF. Joining me today are Cheng and Stefano Ghezzi from our Renewable Power and Transition group, who are closely involved in shaping our entry into this energy transition market and the broader opportunity set across the region. Dan, Steph, welcome to the podcast. So to kick things off, can you share a little bit about your background and what you do at Brookfield?
I'm Stefano Ghezzi. I am a Senior Vice President in Brookfield Renewable Power and Transition Group. I'm based out of our Singapore office, and I lead our investment activities in the Southeast Asia region.
And thanks for having us. My name is Daniel. I'm a managing partner at Brookfield, also in the same business group as Steph. I've been with the firm for 10 years. Actually started in Toronto and then moved over here to Asia to help the business grow in the region about 7 to 8 years ago. I have 2 roles. The first is really the head of the country for our China business. And then the other one is that I lead our investing and asset management activities across Asia Pac for power and transition.
So listen, you both are in the region. Before we dig into the specifics across that base, it probably would be helpful for our listeners to zoom out a little bit and just revisit what the Catalytic Transition Fund is, because we last talked about this on the podcast in depth over a year ago around New York City Climate Week. So it would just be helpful to get a refresher from you to walk us through this strategy, what makes it unique, what kinds of investments are we typically looking at through CTF, as we call it, versus others. Dan, do you want to start?
Yeah, for sure. CTF, or the Catalytic Transition Fund, is really Brookfield's primary vehicle for accelerating investments into decarbonization solutions in emerging markets. These include, for us, under the strategy, Latin America, India, and obviously this part of the world in Southeast Asia. Some of the unique aspects about this fund, to your question, it is a dual objective fund. So in addition to these financial metrics, we also look to deliver a very meaningful decarbonization impact that has to be measurable, it can be reported, it can be tracked, and it can be audited in the very same way as the financial return, the metrics. And there's other very interesting characteristics that it might just be worthwhile to touch on and worth a refresh. The first one being, I would say this is probably the most unique aspect about this fund, which is it was seeded by our strategic partner called Altera. And Altera, for those who don't know, they're one of the largest, if not the largest, climate private funds around the world. And they were established coming out of COP28 a few years ago. That gave us $1 billion of equity capital commitment to really anchor this strategy. The other thing I would say is this fund is a commercial fund. When we're investing in emerging technologies, it's all very mature decarbonization technologies where it's commercially scalable, it's investable. And so we don't want to take that binary technology downside risk.
Steph, is there anything you would add on top of that for you?
Yeah, and the thing I would add is the size of this fund will be up to $5 billion, which put it in perspective, it's smaller than our global fund that has just closed at $20 billion. But what this gives us is actually the ability to make smaller investments in the range of around $200 to $300 million, which are exactly the sweet spot of where we see opportunities in emerging markets. And so this gives us the flexibility to partner with local players to back management to acquire single assets and deploy around that capital. That is where essentially we see opportunities.
Yeah, that's a great segue because I want to get into these deals and talk with you a little bit about some of the proof points for CTF that we've had most recently. Solarvest, Alba, Gia Lai. We don't always cover multiple transactions when we talk about deals, but I think there is benefit to looking at them as a group, given they're all part of CTF, and you all can probably help unpack what about them is similar and what about them is maybe distinct or unique, depending upon the company. So Steph, I'll throw it to you.
Yeah, and look, we have been really busy in the past 12 months in Southeast Asia. And as you have mentioned, we have recently completed the 3 investments in our target markets in the region, which are Philippines, Malaysia, Vietnam, and Thailand. And maybe starting with Malaysia and the transaction we have done with Solarvest. So with Solarvest, we have created a joint venture to develop, build, and operate over 1.5 gigawatt of solar farms and battery storage asset across Peninsular Malaysia. And for who doesn't know Solarvest, they are one of the leading EPC and renewable developer in Malaysia. And with them, we have created this JV, which is really targeted to provide green power to industrial and data center customer who have heavily invested in Malaysia in the past 3 to 5 years. And a key reason that we like Malaysia is because it's one of Southeast Asia's most active and policy-supported renewable energy markets. The government has set an ambitious target of achieving 70% of renewable capacity by 2050. And then, as I mentioned, Malaysia has emerged as one of the key data center hub in Southeast Asia, which means that many of our large corporate clients and off-taker on the power side, such as the big tech companies, have invested heavily in the country. And so we have an opportunity to provide them green power in Southeast Asia as well. And this JV with Solarvest combines both Solarvest's strong local presence and project pipeline in Malaysia with Brookfield global expertise in renewable, access to our corporate offtakes relationships, and our ability to mobilize capital at scale. Now, the other transaction we have recently completed is in the Philippines and in Thailand. We have acquired a company called Alba Renewables. Alba is a rapidly growing renewable energy developer with a presence in the Philippines and Thailand. Alba has one utility-scale solar asset in construction that will reach operation later this year. But more importantly, they have a large pipeline of wind, solar, battery assets worth around 2 gigawatt. And to put this in context, 2 gigawatt of renewable capacity is enough to power more than 1 million households in the Philippines. So just to give the context of the scale that we are talking about. Alba was funded and owned by an experienced management team who have a strong track record in renewable in Southeast Asia. And what they were looking for is really an investor that could help them to scale, providing the capital as well as the capabilities to reach a certain scale in the region. So now we have acquired a controlling stake in the company. Management is still running the business, and they have remained as a minority investor in the business. And what we look to do in the next 3 to 5 years is really convert this project pipeline into construction and operation and transform the business in one of the leading renewable developer and IPP in the region.
I think this deal is one of our first in these countries, is it not?
Yes, absolutely. This is one of our first investment in Philippines and Thailand, which are two focus countries in Southeast Asia for the CTF. We actually used to own some assets in Thailand some years ago as part of a global portfolio, but this is one of the first true entry in the country through a standalone investment and platform. The last deal this time is in Vietnam. We have acquired a 100 megawatt operating wind farm in the central part of the country. And this asset has a long-term offtake contract, which provides stability and visibility of cash flows, as well as a few years of operating track record. Now, similar to Malaysia, Vietnam offers a huge potential under the corporate PPA framework, given that the country is one of the fastest growing in the region, and many of our key corporate customers have large industrial presence in Vietnam, and they have a huge demand for green energy. And so we will use this asset that we have recently acquired as a cornerstone to build a strategy and a platform in Vietnam and advance development activities across renewable and battery assets. Also, as part of this acquisition, one of our key pillars of the investment thesis is to use our operating capabilities in the wind sector to improve the generation and the operating performance of this asset, as well as expand the capacity of the asset using existing land and grid infrastructure, which we look to do in the near future. So to sum it up, all of these transactions are a good example of how Brookfield will invest in the region and our flexibility to acquire a company, a single asset, or to partner with a best-in-class local player to deploy our catalytic capital and leverage our capabilities in the sector.
Yeah, I'm struck by the relative diversity of the companies you just covered within this area of transition in the region. We're not just talking about solar, we're not just talking about wind. It's a pretty mixed portfolio. And I'm curious how these proof points and recent transactions sit within the broader context of the transition opportunity in this region, how we might see it depending upon the factors or the environments or some of those things relative to other parts of the world. Can you guys give us just some context on that? Where these sit within transition overall in this region versus where we look at things more globally?
Yeah, for sure. I can start. Very good question. I would say maybe a few things, and maybe if I can take a step back. We will admit Southeast Asia is quite a new region for Brookfield. And so the three investments that we've made, as Steph went in detail just a few moments ago, if we look at the three investments, they all fall into our clean energy bucket in terms of investment themes. Clean energy is effectively wind, solar, batteries. And the reason we did that in this part of the world first is, while we have a very diverse business in decarbonization transition, by a large margin, we have the longest track record history investing in your traditional renewable energy sources. And so this is very down the fairway for us, very natural. We wanted to make sure as a new region, we'll get our foot in the door, we have boots on the ground, we have a local presence in each of these markets. So that will better position us to screen opportunities, underwrite them, and execute them. Steph can probably talk to this in a little bit more detail. But if you look at our pipeline of investments at the moment for CTF, outside of the clean energy bucket, it's also very diverse around business transformation and sustainable solution themes as well.
Steph, it would be great to hear from you a little bit more about the other opportunities in the set in the region and maybe also some of the contextual elements unique to Southeast Asia that we might not say the same for Europe or the Middle East, for example.
Yeah, and that's a very interesting point. Maybe let me start with the broader context on Southeast Asia. And Southeast Asia is a very large and diverse region, 11 countries, 700 million people, which accounts for roughly 10% of the world population. The region has been growing very fast, and it has become one of the largest engine of energy demand globally. And there is a large imbalance between energy demand and energy supply, which creates a really compelling opportunities to invest in the energy transition and clean energy sector. On the other hand, governments have announced and roll out policies and framework to incentivize investment into the renewable space. And so most of these countries are now investable at scale. And it's not only on the government side, but also on the corporate side. As we mentioned before, there is strong demand from corporates around the world who have invested in Southeast Asia and demand security of energy and green energy in particular. So this creates a perfect catalyst for Brookfield to expand our investment activities in the region, leveraging our global expertise as well as our boots on the ground. So we at Brookfield have set up a team based out of Singapore to cover Southeast Asia. And that's not only on the investment side, but we have also added expertise across asset management, engineering and technical services, legal and tax, among others, to make sure that we are appropriately set up to cover the region.
How do you think about, quote unquote, what's next, maybe for CTF, and let's just say more broadly in the region? What's intriguing you as you think about where we've been and maybe what we've been able to complete more recently and what lies ahead?
First and foremost, we are really excited for the investment that we have recently made, and we look forward to growing those platforms in the region. But on top of that, we have a very deep project and asset pipeline across the three verticals that CTF can invest in. And it's not only on the renewable energy side, but also on the sustainable solution and business transformation. Sustainable solutions, which are sectors and technologies that are critical for the energy transition and have infrastructure-like characteristics, such as long-term contracts and stability of cash flows. And those sectors are things like biofuel and biogas, hydrogen and carbon capture, investments across the EV and battery value chain. And Brookfield has made these investments in these technologies in other parts of the world. And we are actively looking to leverage our internal know-how and expertise to access opportunities in this sector, in this part of the world. And the third segment is business transformation, which is really partnering with or buying carbon-intensive businesses and helping them to decarbonize. As Deb mentioned before, we recognize that sometimes we need to go where the emissions are in order to facilitate the transition to net zero. And this can mean owning emission-intensive companies for a period of time, but with a clear business plan to transition and decarbonize them. And so we are actively looking at investment in these sectors in the region, which is extremely exciting.
In this part of the world, I think one of the very scarce phenomena that we have seen on the ground is when we think about emerging markets, we're not targeting every single emerging market around the world. We're being very selective. In LATAM, it's not the entire continent. We mainly look at Colombia, Chile, Brazil, geographies where they're large and we have boots on the ground and business on the ground already. The same goes for India. In Southeast Asia as a whole, these are very, very large end markets because you have a growing population, a rising middle class. The economy, as measured by GDP, is increasing at a pace that's faster than most parts of the rest of the world. And when we think about these trends around industrialization and digitalization and the broader trend around electrification, the massive increases in energy demand is going to be met with power or electricity. So the reason that we're really excited is, one, you can invest in growth in this part of the world, but because of the earlier comment that we made around scarcity of capital or chronic underinvestment in transit in this part of the world as well. For the right investors with the capital and the capabilities, you can really identify opportunities for value. And usually those two things don't happen hand in hand. You can either invest in value or growth, but I think in Southeast Asia, you can do both. So that's very exciting for us. And I think we're just starting with the 3 investments we've made in the region.
Well, thank you both for joining today. It was great to have you.
Thank you. Thanks for the time.
Thank you, Meredith.
Thanks for listening to another episode of Brookfield Perspectives. Make sure to follow us wherever you listen. You'll be the first to hear when new episodes drop.
This podcast is for educational and informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any securities or related financial instruments offered or sponsored by Brookfield. The information and views discussed are subject to change without notice. Any investment involves significant risks, including loss of the entire investment.
Audiation.